On here, some really big news is coming out that we've all heard about. It looks like this economy is going to see a lot more stimulus. Interest rates are very likely going to remain at zero for quite some time, because if they raise them, they're essentially going to destroy this market, and everyone will essentially get wiped out that are holding on to a lot of adjustable rate debt. Everything's going to get harder to borrow money for your business, for expansion. The economy would basically tank if they attempted to raise interest rates right now. We can see what happened today in the stock market. In the stock market, you saw some real fear. Check this out. Give me a thumbs up in the chat if you guys can hear me. So I'm betting that we see a lot of stimulus hit this market very soon. So there's a market crash that happened today, right? And stocks have been tumbling. But this is interesting here. So the UN, right, they warn of a collapse of the banking system in Afghanistan, right? Hey, Reggie. So they're warning of a banking collapse in Afghanistan. Yesterday, or excuse me, probably 2 days ago, in Turkey, the currency dropped 15% in a single day. 42% the currency dropped in the year of 2021. They lost 42% of their purchasing power in Turkey. So what they're saying here is that the United Nations on Monday pushed for urgent action to prop up Afghans' banks, warning that a spike in people who are unable to repay loans, as well as lower deposits and a cash liquidity crunch that could cause the financial system to collapse within months. So you look at what's happening in Turkey, right? You look at what's happening here in Afghanistan, and now what's happening in America. In a 3-page report, Afghans' banking and financial systems, seen by Reuters, the UN Development Program, said the economic cost of a banking system collapse and the consequent negative social impact would be colossal. An abrupt withdrawal of most foreign development support for the, right? So we see that. Then what we're looking at now is in Latin America. Inflation's raging everywhere, but it's worse in Latin America. And they're saying that inflation shocks are spreading pain around the world, but nowhere is it as bad as Latin America. Price surges are busting through policy makers' targets in all the region's major economies, with annual inflation prints this month of 6% in Chile, 6.2% in Mexico, 10.7% in Brazil, and 52% in Argentina. Unbelievable. So the people that were barely making it before, now are just getting completely wiped out. They're getting completely wiped out. Look at all the people that are going to be starving in Africa and all these other places around the world where they already have a real issue with, being able to provide for themselves. They're going to be, and then we couple that with this shipping and distribution problem right now. So we're going to have food products going up across the world. Chip shortages, we're going to have issues getting appliances, car parts, vehicles, all of these things. There's going to be a distribution problem, right? And that problem is likely only going to be solved by increasing prices, which is then only going to squeeze the people in the middle and the bottom. They go on to say that major street banks are foreseeing average cost of financing increase in Latin America will end the year above 10%, the highest globally, and predict pressure on consumer prices will extend well into 2022. So the world's worst inflation is adding to the pain Latin America has been going through as one of the hardest hit regions during the pandemic. And while fiscal support was unprecedented in many of its countries, its most places was a fraction, right? And so the largest seen in US and Japan, right? So we look in Europe. Japan comes out swinging with record stimulus package. Prime Minister of Japan announced a 56 trillion stimulus package to fight the economic devastation, right? In the US dollar terms, just shy of half a trillion dollars, and 60% above earlier estimates. A budget to fund the mammoth package will be announced by year end, taking its stride, right? So we see Japan, we see Latin America, we see Argentina at 50%. We see Turkey at 42%. This is just all this year. We hear what's happening in the news right now. We know that problems are likely going to come. And in Turkey, for example, they are not raising interest rates, and they're going to continue printing and printing and printing money. So they've already lost 42% so far this year, and they intend to continue. My guess would be that their currency would continue falling, right? They're not going to take any other outside action, so you could expect the same. The Fed chair decision is on the horizon late on Tuesday. Biden said that he expects his decision on who will chair, right? So this is a week or so ago. And then the fourth stimulus check, this just came out yesterday, right? Stimulus checks come to the aid of many Americans during this, but with the financial responsibility having shifted from federal to state governments, there is confusion as to what benefits people now have in the USA. Not all states are offering fourth stimulus checks, but there are financial benefits on offer in most, if not all, states. The financial systems available in the USA aren't just limited to stimulus checks anymore. In addition, there's tax break, extended benefits programs, unemployment benefit increases, child and dependent care, tax credit, and other creative incentives in certain states, right? Okay, now what we're having here is a currency crisis spiraling out of control, and the experts noted that the same factors which triggered the 2007-2008 economic meltdown, which ended with 500 billion% inflation, the collapse of Zimbabwe dollar, Zimbabwe's currency has suffered its worst battering on both the official and parallel markets in recent weeks after the foreign exchange auction system struggled to fund allocated funds to companies. The volatilities have also eroded consumers' buying power, leaving most families struggling to make ends meet. The economics spoke at the Reserve Bank in Zimbabwe, said that the currency traded at 105,000, right, of the auction system Tuesday. Sharp decline, 5.8%, right? Okay. Czech Republic. Czech mortgage banks get tougher in mortgage lending rules amid the property boom. Because what happens when interest rates are low and they're printing so much money, most people say, hey, I'm just going to lock in this low interest rate. I'm going to allocate all of these, we know that funds are going to essentially get punished over the next couple of years. Fiat currencies, might as well take those currencies and put them into rock solid assets, right? Well, a lot of property markets around the world have seen levels that are quite concerning. And so banks are getting scared. It's not just Czech Republic. It's not just America. It's happening in Germany. It's happening all over the world. And now the Czech National Bank will reintroduce limits on mortgage lending using new legislation powers and also raise the countercyclical capital buffer rate for banks to counter relaxed conditions amid a property price boom. The central bank said on Thursday mortgage lenders would face limits on debt to income and debt service to income ratios for applications starting in April. All right. Now in Europe, they're warning again. This is they're saying here the European Central Bank warned of stretched valuations in many asset markets as regions continue to recover from we know that we're essentially going to be stepping into probably another problem because we're hearing about it everywhere. So if we're stepping into another problem, then we need to understand what's going to happen the next 6 months, 12 months, really even the next month or so could be very, very revealing. And how they respond to this could have a great impact on how the entire global economy handles itself. But right now, at this point, to me, it looks like we're going to step into a situation where they are going to probably print more and more and more money. And it's going to be the people that have assets, the people that have really things inside of their control that they can take outside of their fiat currency that are going to probably do the best, in my opinion. Because if you're sitting on dollars and they're going to erode your dollar, you're getting taxed every single day that you're holding dollars, which is unfortunate because you're going to need the dollars as well to buy food, to buy products, to buy, to pay for everyday life. But if everyday life is getting more expensive by 3%, 5% or more per month, and wages aren't rising, what's going to happen is that we're going to have a system where we're going to have a lot of people that are going to lose their businesses and lose their livelihoods due to this manufactured financial collapse, right? With all this stimulus and all of the low interest rates and everything that's happening right now, this is not how economies generally function. The Eurozone Central Bank mentioned vulnerabilities in property and financial markets, adding that risk-taking by non-banks and elevated sovereign and corporate debt are building up. On property, it is said the risk of price corrections over the medium term have increased substantially amid rising estimates of house price overvaluations. In particular, households with variable rate mortgages or shorter fixed rate periods on these mortgages are exposed to an unprecedented rise in interest rates, which could adversely affect their ability to service debt. Now, if you don't know what a home equity line of credit is, or essentially what this is, and it's becoming very, very popular right now, is if you have let's say your single family home, it's worth $500,000, and you have one mortgage, and that mortgage is $200,000. So you have $300,000 in quote unquote equity, but you'll be able to take out a home equity line of credit for 75%, roughly, for the argument's sake, of the property's valuation in a HELOC. So if you have $200K in debt, and they're saying, okay, we'll let you borrow another 150, ballpark, you borrow it with these low interest rates at, say, 3%. You borrow the home equity line of credit, and it's only going to be fixed for a year or 18 months. And you have to pay the money back, and if you don't, then it's going to be an adjustable in many cases. So you can see that rate go from 3% to 8%, 9%, 10%, whatever it will go to. And at that point in time, we're going to start to see, I think, a lot of people that thought that they had a lot of liquidity run into a affordability crisis inside of that home equity line of credit area. That's a small sub-market, but it's still a very, very big market. A lot of people are very leveraged right now on second and third mortgages. They have been examples of established market players exploring novel and more exotic investments. In parallel, Euro area housing markets have expanded rapidly with little indication that lending standards are tightening in response. In Kenya, the banks are tightening rules to cover the risk in real estate as well. So you have Czech Republic, you have Germany, you have Kenya. All the banks are essentially saying the same thing, but yet all the banks are also doing the same thing, which is they're flooding the market with all of this stimulus. Borrowers will be required to provide additional security in the event the value of their collateral on loans, mainly land and buildings, depreciate during the loan period to cover default. Kenyan borrowers with collateral whose value has depreciated will now be required to provide additional security as banks move to tighten lending terms. It's estimated that over $37.1 billion worth of securities held by big banks are tied to the real estate amid reports that the value of some properties have dropped. Okay. Now we have U.S. inflation hitting a 31-year high. Now what I'm thinking is very real, a real possibility here. Wall Street banks are planning for a sustained period of higher inflation, running internal health checks, monitoring whether clients, exposed sectors could pay back loans, devising hedging strategies, and counseling caution when it comes to deals. What I think is a very big possibility, I think this is a real possibility, is that over the next 6 months, and drop your comments here. Tell me if you agree with me or you disagree with me. What I think is going to happen is I think that a lot of small businesses across the world are going to step into a very, very troubled holiday season where they're not going to get the foot traffic that they were hoping to get. We could see more closures. And if that does happen, then small and medium-sized businesses, retail businesses are going to get greatly impacted, and the big corporations are going to do extremely well. And then what's ultimately going to happen is they're going to bring out more and more and more stimulus, right? And so more stimulus is going to make things even more expensive. And then we have the shipping and distribution problem, which is going to make, you're going to be competing with people for products. So who pays the most wins. Middle class is then going to get impacted there as well. So what we're going to be seeing, I think, over the next 6 months could be a scenario in which we see inflation at levels that we can't believe. I mean, when the dollar store is changing their name, essentially, to the $1.25 store, that's a problem, right? And when General Mills is increasing all their prices 20% in January with, probably 100 plus brands, everyone's increasing their prices, and this is only just beginning, and they're going to likely print more and more money. What's going to happen? Prices aren't going to go back down. So I think we are stepping into a situation where we could see a real collapse of traditional banking. I think we could really see a collapse of traditional banking. We could see more of a digital banking or some type of, we're already hearing a lot about it with, the digital currencies that they want to roll out. I think that would be probably a big possibility in the next 1 to 2 years that becomes a real candidate for a global, potentially a global digital currency, because a lot of these banks are going to be going under, especially when you have the prices of everything continuing to skyrocket and incomes and wages are going to be probably punished as the economy pulls back and is tightened. So what do you guys think about this? Nothing can stop what's coming. 100%. I fully agree with you, John. Small businesses are now obsolete. Yeah, I think that if you have a lot of dollars, I would rather have that right now into something that's going to hold value. It doesn't even have to be something that you're hoping to get rich on, but 100% will, or not, nothing's 100%, but close to it, where it will at least hold its value, because your dollar is not going to hold its value, in my opinion. Especially if we look at what's happened over the last 12 months, 18 months, 24 months, and what is very likely going to happen again. I think some big announcements are coming out soon, probably next 1 to 2 weeks, that are going to change the level of consumer confidence inside of this entire economy. But I'm going to keep you guys updated. I have a bombshell news story for you guys on what's happening right now with the Walmart family. It's incredible. I'm going to be coming on here probably the next, 2-3 hours, but they essentially want to privatize water. They want to privatize water. I'm going to be bringing on Aaron Tweet, so he'll be joining us, and it's going to be a really interesting story. But stay tuned, hit the notification bell to join in. But essentially, water prices, everything's going to be going. It's fascinating. So hit the notification bell, and you'll be updated. And subscribe here. I'll catch you guys on the next live stream.